Hello and welcome to the trade on this Monday. Let's take a look at first at what traders are watching out there today. President-elect Donald Trump saying he would nominate billionaire investor Stephen Feinberg to serve as Deputy Secretary of Defence, while Stephen Moran, who was an advisor for economic policy at the US Treasury Department when Donald Trump was last in office, has been tapped by the President-elect as the chair of his Council of Economic Advisors. Oil prices were a little changed on Friday as markets weighed Chinese demand and interest rate cut expectations after data showed US inflation is cooling, and gold prices gained, supported by a softer dollar and treasury yields after that data showing that there was a slowdown in inflation, although the Fed's hawkish interest rate outlook has kept bullion on track for a weekly loss, in fact, ending negative for the week. And the accelerating spread of bird flu through US poultry flocks is pushing the price of eggs to highs rivaling or exceeding the cost in December 2022 at the height of the post-pandemic inflation scare. And cocoa futures closed low on Friday but ended the week with gains of more than 6% that drove the commodity to record highs. Raw sugar closed higher after 6 consecutive sessions of losses. I would say that's all bad news for your daily coffee hit. Well, let's get some technical detail now. Michael Gable joining us from Fairmont Equities. Outside of coffee, let's a little more prosaic as far as what we're seeing on the broader market at the moment and whether the Santa Claus rally is still going to happen. What are we seeing in terms of momentum, particularly when you look at the ASX 200?
Yeah, I suppose how do you define a rally? Is a couple of days enough? I mean, we're up today, so that's pretty good, but definitely didn't finish the week on a good note. For our market and the US market as well. So if we have a look at the ASX 200, generally been trending higher all year as we've noted before. We could see on the far right hand side that that drop lower in the past 2 days has seen a few hundred points get wiped off the market. There is a little bit of support here, but one of the main things I was looking at was the 50-day moving average. So that's the blue line. As we could see so far this year, the market's spent most of the time above that line. On a few occasions it's briefly dipped under it, but when it does, it needs a bit of time to get itself going again. So look, the market's up today. As I said, a bit of support at these levels. I think given the support around here, you could start having a bit of a nibble at a few things, but ideally you'd want to see it back above that blue line. So given that it's still over a couple of hundred points away, it's not going to happen before Christmas, unfortunately, with only one session left tomorrow. But
so you're saying while it's below that blue 50-day moving average, then it's in danger of breaking either way, perhaps?
Yeah, look, it's basically a situation where there might still be a few opportunities out there. So some stocks do buck the trend. So I think it's a case of, look, there's still the occasional opportunity, but you don't need to be piling in fully invested. I think you'd prefer to see it above that blue line until you can get pretty aggressive with the market. But as we're about to look at now, there is the odd stock out there. So if you're sitting on cash, I think there is the odd opportunity for our viewers to have a bit of a trade.
Well, let's go there then with some stocks you're taking a closer look at. Now, the first one being Beach Energy, and it's been a very ordinary year, hasn't it, if you're a Beach shareholder? However, what have you seen most recently?
Yeah, in some ways it's done the opposite of the market. The market's gone up, Beach has gone down, but most recently, when the market's been under pressure, Beach has been holding up really well, and it looks like we do have a low in place. So what's grabbed my attention is, after that bounce off the September low, Beach then spent pretty much October, November and early December just trading sideways in a horizontal range, and I've indicated that with a blue line. So it's not a perfect rectangle, but it's pretty close to it. And when you see well-defined ranges like that, it gives us an easier trade. It means that a breakout of that range could be a buy on the upside, or break under it is a sell. In this case, we saw Beach Energy break to the upside about a week and a half ago, and then while the market's been under a bit of pressure, it's just traded sideways. So I've circled all of that on the right hand side. So that's actually pretty good price action for Beach. I don't know if it's telling us something about what oil might do from here, but I think if you're looking for a trade, and that's why we're on the trade here, it's Beach is a buy here. I'd have a stop loss just under $1.30, so you can run that pretty tight, and I think it'll head for a run into the 150s.
All right, that's a close look then at Beach to Codan. And, well, by contrast, you wouldn't be complaining if you've held this stock over this year, although just over the past 3 months, that share price growth has stalled.
Yeah, and this is another one that's similar to Beach. It's provided us with a very clear sort of trading range for the past few months, and I've shown that with the blue lines. There has been the occasional sort of pop below or above, but it's generally been within that range. So at the start of December, it gave us a breakout that only lasted a day or two. It was one that we were happy to pick up for clients on the breakout, but it has moved back into the range. That's okay. And actually this chart was before today's price action, and it looks like it's breaking out once again this morning. So I think if we have a closing price today above 16.50 for Codan, we could say that that's now an upside break, and that's a buy signal. And you can run your stops pretty tight. We've got our stop losses for our clients around 15.30. So you'll notice that about a week ago it did breach that, but it was intraday. So we didn't have our stop losses in the screen, otherwise it would have been taken out. So that's one of the dangers of using stop losses. But we've been watching that price. It didn't close below our stop loss level, so we're still in the trade. And I think if it closes above 16.50, as I said, that's an upside break, and you'll probably get a decent rally from there.
Now, an even better looking chart is the next one, Telix. It's been very impressive this year. Is there more in this though?
So far the charts say yes. It's it's been trending well all year. It took a bit of a breather across July, August, September, traded sideways for a while, and then it got back into that uptrend. The squiggly blue line is the 20-day moving average. It tends to respect that line pretty well. Sometimes it dips under it a bit, but just an example of a great trending stock. And who knows when the trend will end? It may be tomorrow. It may be another few months or so from now. So I think what you do in a situation like this is, each time it dips back within that trend, that's a buying opportunity. And again, we saw it dip back on Friday. Didn't really pull back on Thursday with that weak price action on the market. So again, showing good strength, which is a positive for this stock.
All right, let's round it out then, Michael, with a look at Yancoal. Well, it is in obviously coal, and look, just having struggled a little. But what are you seeing here then?
Yeah, so this is one that's not necessarily a buy right now, but let's keep an eye on it. Why it grabbed my attention is since the peak in July, it has formed a very clear resistance line there. So that's the blue line. Ideally, it'd be nice if the line was horizontal, but in this case, even though it's diagonal, it has very clearly found that level to be resistant. So that's where the sellers step in each time. But on the positive note, as I've circled there, it's been holding in just under that line. So after that big dip we saw in August, any selling hasn't been able to push it back below $6 again. So it looks like the sellers are weakening off. And what I'd do here, the strategy would be a close above 660 would be a buy signal, and then I'd expect a quick run up towards 760.
There we go. There's 4 stocks and, of course, a broader look at the index to take a look at. Michael, terrific stuff. Thanks for joining us for all your efforts, in fact, on the trade this year. We'll look forward to doing it next year.
Looking forward to it. Thanks, Andrew.
And that is the trade.